All right. So for everyone that showed up, thank you. I am William Holder of the William Holder Realty team. Tim from our team is here as well, Tim Aiken. Tonight is one of our first-time home buyer or just in general home buyer seminars. Tonight we have James Verdi and Dave Payong from James is with insurance, Dave's with mortgages. We're going to take about 5, 10, or 15 minutes from each of them to go over kind of what's going on in their worlds in terms of the real estate market. And then I'm going to go into, how some of the programs in terms of being a home buyer, how the process works and everything like that. And if you have any questions, feel free to stop me. If not, we'll just go through it at the end. Feel free to ask any questions. So from here, I'm going to let Dave get started. Dave, you want to jump in and share a little bit about yourself?
Absolutely. My name is Dave Payong. I am the broker owner of Bank of England Mortgage in Kennett Square, Pennsylvania. We are not headquartered out of England. We are headquartered out of England, Arkansas. We serve 50 states. I have 26 years in the business. And I can tell you, you're probably asking yourself questions. Can I afford it? Do I have enough money? Am I ready to buy a home? I think the question we all have is, are you home ready? And I think that starts, and I know this from a very terrible experience, with the right realtor. My wife and I, Bobby, moved here. It'll be 4 years in August. Made an offer on a property in Glenside. Offer was accepted. The seller's realtor gave me the phone number for a fencing company because we have 2 small dogs, wanted to make sure they didn't get out. And we also scheduled an inspection with the seller's realtor. I get a text 2 weeks later, they want my best and final. And because of something in the contract, because I am not an expert in the real estate field, mortgage, I answer 99% of your questions. I missed something that spent $780 on an inspection, and I had a really hard time getting my $5,000 back. And my wife literally shut down for 3 months and stopped looking. That's exactly the opposite of what I want anybody that has to buy a house, regardless of if they use me or not, to avoid going through. So in my opinion, and we all know what opinions are like, but in my opinion, I believe a realtor, a mortgage broker, an investment broker, a doctor, and a dentist should be in your phone book, and they should all be the same person because they're helping you make really powerful decisions, whether it be your health or financially. There's only one way to find out if you're ready to buy a house. And a lot of people, including myself, I just bought a car. I do not like to ever have my credit pulled. Sooner or later, whether you think you qualify for it or not, we need to do that with the idea in mind. If you're not ready right now, what do we need to do over the next 90 days to make you ready to afford a house of X? And what moves do you have to make along the way? I have a customer now that pulled a 600 credit score. We can do that, FHA, no problem. But we have a repair as part of our credit scoring, and it's no cost to the client, where we have been able to increase her score to 641. And now she's going conventional with a lower interest rate and a lower payment because she's part of what's called Home Ready, and she only has to put down 3%. My goal and your goal as a homeowner should be, and let's face it, rates will probably go down sometime in your lifetime again. They've been up and down like elevators my whole entire career. I've never seen anything like what's going on now. But if you're not ready now, we can put you on the map. And you know what? I probably have dealt with at least 50 people in the last 2 years that had no clue they were ready to buy. Well, all I have is $5,000. Okay, well, what are you looking to buy? Well, I'm looking to buy a house for $200,000. Okay, your $5,000 and a 5% grant, there's your down payment. You have another $5,000 for closing costs. You're X amount away. So 4 months ago, they had no clue they can own a house. They closed on their house 4 months later. And it should be comfortable for you. I don't push. I give honest advice. Would love to help you. I've helped over 8,000 people do this, and it should be seamless as it can be. Nothing pains me more when I hear a mortgage person in a realtor's office say, well, we have, competitive rates and pretty good service. My follow-up to that is, well, if you don't have competitive rates and you don't have white glove service, you shouldn't be doing this for a living because you're making people's lives very difficult if something should go awry. So I'm available 7 days a week. Doesn't matter what time. You can text me, you can call me, you can email me. I make myself available obviously on the weekends, evenings. Tim knows that. I've paired with him on a couple of things. William knows that. I've paired with him on a couple of things. I look forward to pairing with you, John. I want to get your contact information as well. But I'm all about questions. And I don't know if my contact information's on here, but I can pass it around. But when I don't get questions from a prospective home buyer, whether it's their first or their fifth, I tend to get worried because if I were to jump into any of your shoes and try to go to work for you, it wouldn't happen without a billion questions. And that's something that I invite because I don't like surprises. So if you're looking for an honest, seamless transaction to be informed and be communicated with, I've helped over 8,000 people. I'd love to help you.
Awesome. Thanks, Dave. Appreciate that. I do have your contact information on one of the slides, and I'll leave it up at the end.
Okay.
And we'll also post it with the video so that everyone has it as well.
Awesome.
So, Jim, stage is yours.
All right. Yeah, I'm James Verity. I'm with the Mallon Group. We're an Allstate office in Springfield, PA. I've been with Allstate since 2006. So know my way around the underwriting and really insurance in general. Since it's all regulated by the state of Pennsylvania, it's all going to be very similar from carrier to carrier as far as coverage availability, general sorts of rules and guidelines. So with property insurance, specifically homeowners insurance, the foundation for that is what it would cost to rebuild the house. So we have a computer program that takes into consideration the age of the house, the square footage, the way it's situated with other houses, if it's like in a row or detached, and that number is kind of like the where all the other numbers sort of come from. Part of it that David actually mentioned, credit. Insurance companies do look at a financial stability rating. They call it an insurance score. It shouldn't affect your credit score since it's not an inquiry. They're looking for capacity. Basically, anything that you can show an insurance company that makes you more predictable than somebody else, that's the kind of stuff they're looking for. So if you're currently renting, getting renter's insurance now gets you in a good spot when you go to buy your home insurance. You get the claim-free discount right off the bat if you're able to show 12 months or so continuous coverage with no claims for property. There are other discounts like multi-policy discounts if you have your home and your auto together with the same carrier. And it's something to consider too as a homeowner. The auto insurance limits in PA haven't changed in over 40 years. So that means, property damage liability, like the money that the company would pay to repair somebody else's car if you were at fault in an accident. State minimum for that is still $5,000. So that's just the tip of the iceberg. There's other aspects of that auto policy that a lot of folks just never even look at. When you're going to buy a house, that is something worth taking a look at. And same goes for life insurance, disability insurance. These are all kind of parts of that financial picture that will make that home ownership, that asset that you'd be involved with, just that much safer as far as protecting that asset. And I have a sample quote here that I can share if you enable screen sharing, Will. There's very similar, the layout for property insurance code is very similar from carrier to carrier. There's also a really good document available on the PA Department of Insurance website that I share with everybody, as well as like a one-pager that I put together. Since it's not rocket science, it's not common sense either. So it's the sort of thing that a little bit of effort every so often can get you a really good understanding of what it is you're paying for with insurance. There's limitations on any kind of insurance policy. There is no such policy that would cover everything. Typical exclusion is underground plumbing, like pipes that run to the house, clean water and plumbing, the sewage and all. Underground pipes can break, and that's not within the scope of typical home insurance policy, but a lot of carriers are starting to offer that as an additional endorsement. The other thing to be aware of is flood insurance, another thing that's not within the scope of any kind of property policy. It's a completely separate own thing. If you're not in a special flood hazard area, it wouldn't be required as part of the mortgage. It is something that's available for anyone, though, if you have a concern about water coming up from the ground or running off the ground. My house, I can see a creek from the back of the house, and I just picture that thing overrunning its banks and causing problems, because I guess I'm in the problems business or whatever. And once in a while, we do take out a little flood policy. I'd say the general rule for buying insurance is is it fitting with your budget, so you're not spending more than you can afford on features and various other aspects of insurance, and is it stuff that you really care about? Because we have customers, they're super handy, they keep high deductibles, they never make a claim, they have smaller stuff they'll take care of themselves. And we have other customers who they just want the lowest possible deductible, and they're looking at things a little bit differently. And that kind of customization you can get on your own if you know what you're asking for. So in PA we have a captive agent, like an Allstate agent, State Farm, Nationwide, whatever. There's brokers who have access to a lot of different carriers. And then there's direct writers. So you could call a 1-800 number, like a Geico or Progressive. I think USAA is a very good one if you have military connection there. Very competitive, easy to deal with, but you're not going to be getting the kind of conversation that you would get with a local agent. And whether it's me or whoever it is, I feel like it is definitely worth, especially if it's your first time, sitting down, talking to somebody, and getting a feel for like what's out there with the different options and all that go into making your policy kind of custom fit for your situation. It's something that's you're the boss. The customer is in charge of these decisions. It's not your realtor, it's not your lender. After the deal's done, you're going to have that policy, and that's going to be something that you keep moving forward. You can make changes to it. What comes up sometimes, somebody's buying a house, their debt to income may be too close, and they need to kind of get the most basic home policy to get in the house, and we can make changes down the road. So it's not like set in stone. The company can only make changes around renewals and around the first 60 days of a policy being created. So from there on out, as a customer, you can make changes as you see fit. Other than that, I'd say there's a few other things that come up around understanding the property insurance. There's this idea of replacement cost, having enough insurance to rebuild the house that's there, versus the actual cash value that would be more like set on the market value of a home. And it doesn't matter where the property is located, it's going to be similar to rebuild it. The value of the land that the house is on isn't something that we're insuring. So, for example, if you had a $300,000 house in say like Southwest Philly, it'd be a gigantic house, maybe like a 4-unit property. Same price point in in Swarthmore, let's say, might get you 1,400 square foot. So to rebuild the one is going to cost a lot more, $600,000. Gigantic 4-unit place. The other might only be 250,000, but their replacement cost is still, the market value is still what it is. So that's something where having a good understanding of what it would take to rebuild that property, that's how you go into making the rest of those decisions. And the deductible part I had mentioned briefly, that's your share of any loss. So say you have fire in the kitchen and there's $10,000 worth of damage. You have a $5,000 deductible, you're going halvesies with the insurance company. You have a $1,000 deductible, then you're going to be getting $9,000 back to put towards rebuilding that damaged property. Other aspects of the policy, we have a, let's see if I can pull up the sample quote. All right, so we have the dwelling that I had mentioned is the basis for that. With this property, we're saying a $238,320, and again, this could be in Swarthmore, or this could be in Southwest Philly. For this property, the size, the shape, dimensions, weight, it's situated, the age of the property, we figure it would cost that much to rebuild. There's liability part. So say somebody slips and falls and they're trying to sue you for an accident that happened on your property, that's where this coverage would come in. And $100,000 is typically the limit that would be included with a property policy. For an extra $20 a year, we can raise that to $300,000. So with insurance, it's always going to be little dollars versus big dollars. And if there's a way to spend $20 to get an extra $200,000 in coverage, I say do it. We could actually raise this up to $500,000 now, which is nice. And that would probably be another $30 on top of that per year. These are all in annual premiums for homeowners. Sometimes auto, you'll see 6 months. Homeowners is 12. Yes, medical doesn't really come up too much. Similar thing though, you get the somebody has an accident. They don't actually have to sue you to use the guest medical, but it is out there, and that's another one that could be raised. Personal property, this is also known as contents coverage. This would be like your furniture, pots and pans, wardrobe, all your stuff. That is default to usually 50 or 60% of the dwelling limit. I made it 30%. That's as low as we can go, and that saves a few bucks on the annual premium there, $13 off. Other structures, again, you could see a similarity here. 10% of the dwelling limit. This would be like detached garage, gazebo, whatever you have, big shed. And if you do have really big detached garage, you could also raise this limit. If you don't have any detached structures, it doesn't matter. It's included. It's just the limit. Pretty good concept too. The idea of a limit of coverage, like if you're lowering what would have been probably around 70 or 80,000 for contents, and you don't have $68,000 worth of stuff, you don't have to worry about being underinsured in that respect. So doing a household inventory is a great call. When you're in the process of moving, you have all your stuff going from a box to a truck to a room in the new house. It's a chance to kind of make an inventory and to figure out if that contents limit is adequate. Building codes coverage is another thing. Say you have an older house, it burns down, they're rebuilding it, and some of the things that were aspects of the old house aren't up to code currently, so there's an extra part of the policy that can also be increased if you needed to. Additional living expenses would be provided for, you have a loss, the house is not livable, and this would go towards your Additional living expenses like a hotel room or a furnished apartment, something like that. Again, you see that 10% of the dwelling limit showing again here, and that is another thing that you can raise. These are some optional endorsements. You got ID theft, water backup provision. I put just an example here. You got certain types of personal property that have inside limits. There's limitations on like jewelry, firearms, a few others where it's very, very easy to raise those limits. If there's a business exposure in the home, say you're working from home, or you have like a little daycare set up in the house, these are the sorts of things that change the risk, as we would call it. So you want to make sure that any kinds of business stuff going on is covered by the policy. I don't have that endorsement listed here, but we do have an in-home daycare that's kind of useful. Comes up sometimes. Then we got your deductibles part again. There's 2 lines for wind and hail and all peril deductible. So we're talking about perils, right? This is the type of stuff that can cause damage to a house. There's a basic policy form. I'll actually pull up the home guide real quick. So this is good, unbiased document information from the PA Department of Insurance website. I don't know if they still have it on the website. I've been using this for years doing this presentation because it's great. It's not coming from any specific company, and it gets into the nuts and bolts of property insurance. I'm really just focusing on these 3 forms for property insurance. Basic would be a list of things that are covered. So that would be like fire, lightning, windstorm. This is your basic form. So you're listing these things that are covered. About 9 things there. Broad form lengthens the list to include some types of water damage, like overflow of an appliance, break in plumbing. Now, the actual plumbing repair wouldn't be within the scope of insurance because it's wear and tear. It's just inevitable. Everything eventually wears out. There's no way to insure against it. This is the universe we live in. Now, the damaged property from that break in plumbing, that's what the insurance is intended for. I've actually seen some pretty catastrophic losses around that with the break in plumbing. So they'd pay to repair the damaged stuff, access the plumbing, and then put everything back, like it never happened. That's what we're all about, making it like back to normal. And these 2 policy forms, basic and broad, you're going to see these are probably going to be your more affordable types of policies because anything that's not on that list is not covered. The special form, they call this HO3. This is, instead of listing things that are covered, it's listing exclusions. So anything that's not on this list of exclusions, basically anything sudden and accidental that's not on this list would be within the scope of the policy. That makes it the most comprehensive one out there. And that's a point that you want to bring to your producer, asking if it's a special form or HO3 policy. There's tenants like condo insurance. There's an older homes form. That would be like that actual cash value. It's like a 19-page document. It's really good. And I'm sure Will can share that with you guys.
Yeah, if you don't mind sending that to me, James,
yeah, for sure.
I'll add this to the when we post the video, we can add a link of this with the video. Thank you for sharing all of that. That was really great.
Absolutely. Yeah, and this is just a 1-pager you can send out as well. And of course, any questions, anything, I'm totally available anytime. I appreciate you putting together this workshop, Will.
Yeah, absolutely. And I'll also post your information. And we'll make sure we tag you on, so if anyone wants your information, they can get a hold of you. So I'm going to run through just kind of our buyer presentation really quickly. Essentially, the point of this is to prepare as many buyers as possible for owning a home. When our team gets calls from buyers, either they're referred to us by a lender or insurance person or just through the website or past clients, we want to figure out, are they really ready to buy? Does it make sense for them to buy? And usually the answer is yes, it makes sense to buy a house, especially in a market where more and more homes are being owned by large rental corporations. Owning your chunk of a property is a big, big benefit to yourself, for your future wealth and your family. So if you can own a home 100% of the time, do it. Now, obviously, if you're going to be in the area for 2 months and you're moving out of the area shortly after, and you don't plan on ever owning a rental property, then maybe don't buy a home. There are certain reasons for not buying homes. They're few and far between, but maybe buy a home in a different market versus this one, right? So, when buyers call us, they ask, well, should we buy a home? So, the first question is just some general probing questions to find out, does it make sense for the buyer? Does it make sense for you to be a homeowner in this current point? After we figure that out, then we need to make sure that financially they're ready to buy a home. And that's generally where lenders such as Dave come in, where we pair you with a great lender like Dave, or some lender, Dave's one of the lenders we work with that we want to pair you with, so that we know we're giving you to someone that's going to responsibly handle you. Believe it or not, there are terrible lenders out there that guide buyers in the wrong direction, that'll happily decline them and won't work with them to get them to be a homeowner. And we don't ever want our clients working with lenders such as that. So we'll put you in touch with the lender. We'll make sure you're qualified, you're strongly qualified. Our team is here to help coach buyers through the process of owning a home and also selling, but we work with a lot of buyers, and this seminar is about being a home buyer. So our specialty is we are happy to educate you throughout the home process, creative strategies to buying a home, investing in properties, purchasing luxury properties, commercial properties. We're a tight-knit team in our area. We work really hard with everyone that comes to us to help them accomplish their goals of being a homeowner. Our values are, we're extremely knowledgeable. We've sold over 500 homes in the last 5 years, and we're on pace to sell over 200 homes this year. So we do know the area really well. We work with a lot of home buyers and home sellers in the general area, in the greater Philadelphia region, New Jersey, and Delaware. And we want to make sure that we're advising our clients as much as we can. And sometimes that advice is just to work with someone else. If you called me and you said, hey, I want to buy a home 2 hours away, I'm going to put you in touch with the best realtor 2 hours away from here. That's sometimes the best advice is to work with someone else, and that's okay. But if you're within a reasonable distance from us and it's a market we're really comfortable with, we're going to put you in the right home for yourself. So we'll do a thorough consultation, sit down with the buyer, make sure they're qualified, make sure they understand the entire buying process, which it can seem like a long and tough and difficult thing to do, but if you're well prepared, it really isn't that hard. The biggest things to know are get pre-qualified by a lender. So sit with a guy such as Dave, talk to him, make sure you have the funds you need to close, make sure your credit's on par. Really good lenders such as Dave will also pre-qualify you beyond just taking what you say your income and your credit is and giving you a pre-approval letter. They're going to go a little bit further to make sure your credit does match up, your income does match up, your funds to close do match up, and you are actually where you need to be a home buyer. Because that's not only a lender just giving you a pre-approval letter is a disservice to you. You're going to go out there, you're going to spend a ton of time finding a home in a really difficult market. You're going to get outbid, you're going to fall in love with the home, you're going to bid on it, you're going to win it, you're going to be super excited, you're going to pay for a home inspection and an appraisal, and then the lender's actually going to start doing what they should have done when they first talked to you, and they're going to decline your loan because they realized they messed up and didn't get the right information, or they didn't get to do enough homework. And that's going to be a massive waste of your time and your money. We never want that. Our goal is to make sure our clients don't ever waste money. So, working with getting a truly pre-qualified and underwritten mortgage approval is huge. Understanding the process of buying a home. working with a team that's organized and schedules to get you through the entire process of purchasing is really big. Using timelines to keep you on par with what you need to do, because as a home buyer, there's a lot of things you have to do. It's not just go show homes and then close on one. You do have to see homes. You have to fall in love with it. You have to have an agent educated about the home that can go through the disclosures with you and all of the paperwork, that can put you through the right inspections, advise you on the right down payment amounts, advise you on how to write up a proper contract to protect yourself and your deposit money. And they'll help you get you all the way to the table. So, working with us, we'll keep you informed. We'll get you through the process, and we know all of the steps to get you there. But the biggest part is obviously the upfront work we put into working with our buyers, so that once we're out there with them, they're ready and prepared for the entire process, which can be a lengthy one. We want to make sure that doesn't become an issue too far into the process. So currently the real estate market is changing. It's been changing, since September of last year. I've been telling all of my clients to get out of the COVID buzz, because they were predicting interest rates going up this year. Predictions were right. Interest rates have gone up, and they've jumped up. As they mentioned earlier, we went from a point where rates dropped into the twos, into the low twos, to now rates are in the mid, sometimes even high fives on a daily basis. That's a dramatic change. And what we're seeing is we're not necessarily seeing home prices decrease because of it, because the inventory is still very low and there's still a high demand for houses. And our area is going to always have a high demand for houses. I mean, Philadelphia is a top market. The greater Philadelphia region is a top 10 market it's a top 6 market in America and a top 10 market or top 15 market in the world. So people are always going to be coming in and out of this area and looking for housing, both in rentals and homes. So we're always going to have a high demand for housing here. That's going to keep values relatively safe and relatively high. However, it's going to change the amount of people that can afford those homes. At the height of COVID, we had properties with 20 offers on them, 30 offers. That's still happening on some cases, some unique cases. But for the most part, we're more seeing a more realistic number of 1 to 5 offers on each listing we put up. And that's strictly because of the rates. That's the only thing that's changed in the last 2 months have been the rates. So it's pricing more people out of those purchase prices. We had people in the 350 range. If your rate goes up 2%, that changes your budget. You have to adjust. All of a sudden, you're buying a 275 home or a 280 home. It's okay. Just understand where you're at, buy responsibly. And also, it's a good thing because less competition increases your chances or your percentage of winning that property without having to do some of the things that people were doing over the last 2 years, like waive every inspection and go 50 to 80 to 100 to $200,000 over the asking price. Things like those were actually happening. So I think the interest rate spike is making the market a bit more realistic, and that's why they're doing it. It's because they wanted that to happen. And it's slowing down the real estate market. The one thing I always want to warn people about is more and more and more, you're going to find more rental properties in your communities. Not that there's anything wrong with a property being a rental property. Many of the agents on our team, myself, we own rental properties. We understand the importance of having rental properties. That being said, there are massive firms that are relying on rental properties to build wealth for significant investors, and they're buying rental properties in the hundreds of thousands. And we're not talking about apartment buildings. We're talking about single family homes. So when we list a property, on almost all of my listings, I'm getting an offer, a cash offer from investment funds for close to the asking price, if not a little below, sometimes even a bit above. That's a big part of your competition. And the more you allow them to purchase up neighborhoods, the more it's going to affect value, the more it's going to affect inventory, the more it's going to push you out of being a homeowner. So own a home as soon as possible. Being a home buyer, there are 5 different types of mortgages, or 6 different types. There's plenty of different types of mortgages. The major types are conventional mortgages, which, generally if you have a 680 or above credit score, you'd qualify for a conventional mortgage. You do not have to put 20% down. There are banks that have 0%, 3%, 5%, 10%, 15, 20, 25% down conventional loans. FHA loans, 3.5% down products. The plus and minuses to FHA loans, pluses being you can get a 6% seller's assist towards your closing costs. You could qualify with the lower credit score, and you could bring less to the table, about 3.5%. The minuses, the big minus we saw over the last 2 years, and everyone sees as they put in FHA-based offers, are sellers are afraid of FHA offers, especially when they don't have an agent to coach them correctly as to what an FHA appraiser is looking for. And they worry about accepting those offers because there's an FHA inspection completed by an appraiser. That's an added level of fear to a seller. An added level, it's another hurdle the seller, their agent, and the buyer have to jump through to get the property to the closing table. It's not I'm not saying that to dissuade anyone. If you have to go FHA, we're still selling plenty of homes with FHA buyers, but it's certainly something to pay attention to when you're buying a home and you're wondering, well, why am I getting outbid so many times? Because conventional does weigh more or less heavily on a seller than FHA does. 203K loans or home style loans are renovation mortgages. They're great mortgages if you can find the right property to do it on, and if you know what you're doing. If you ever want to talk about a 203K loan, feel free to reach out, but it's an excellent product. And then there's private money VA loans, which are very similar to FHA, except they're for veterans, and USDA loans. And those are things we can discuss in upcoming seminars, but always feel free to reach out if you want more information about most of those products. Generally, the two most common you see are conventional and FHA. We did include a breakdown of the different types of mortgages. I just kind of went through that a little bit quickly before, but there are some pros and cons to conventional mortgage, your FHA mortgages, 203Ks, private loans, and VA mortgages, as well as USDA mortgages. So just to kind of coach you through a quick general transaction of what a real estate transaction looks like. When you're buying a home, meet with the agent if you're choosing, sit down, have them explain the entire process to you, then have them pair you with the lender. Generally, your realtor, if they're a good realtor, if they're an active realtor, has lenders they trust that they want to pair you with. Not because they have some sort of affiliation with that lender. It's more that we've seen so many deals fall apart because of bad lenders. We don't want that to happen to our clients. So we source the lenders we work with. We make sure they're doing the things that get deals to the table, and we try to pair our clients with those lenders. A lot of realtors will try to persuade you from working with big banks because large banks such as Wells Fargo, Bank of America, Citizens Bank, Chase, I've seen transactions fall apart just from mismanagement of the transaction. That's a big funnel. They have a lot of loans that they're doing, and you're a much smaller fish in that pond versus if you're working with a mortgage lender or mortgage broker, you tend to get a bit more hand-holding and care. And I've just seen better transactions with those. And most realtors will tell you the same thing. So, we'll pair you with a lender, make sure you're actually pre-qualified. You're not getting an online generated pre-qualification letter. And we'll coach you on how to buy the right house for yourself. Once we get you under contract to buy that house, we'll coach you through the process of getting your inspections, dropping off your deposit, starting to shop for your insurance, which is where agents such as James come in. Insurance is huge. It's a big part of the process, but you can't shop for it until you really have the house. So you can't pre-shop for insurance until you have the home, because they can't give you a quote on something you don't know you're buying yet. They can give you an idea. So if you're about to put an offer on a home and you have an agent like James, you want to call them and say, hey, we're putting in an offer. My agent thinks the insurance might be $1,000 to $1,200 a month. Do you think that's right for an estimate? Yeah, an agent can give you an estimate, but until you actually have the home locked in, they're not really going to dive too far into it, but they can give you an estimate. you're going to shop for your insurance. Then you're mostly going to work with your lender to get your appraisal order, provide them with any additional documentation they need, go through the whole process of providing the lender with everything they need to get your file underwritten and approved, and you're clear to close so that we can get you to the closing table. So, the process can be lengthy. It can be, a bit much if you aren't properly prepared, and working with the right realtor will help you be properly prepared. So I'm going to cut it off there. I know I don't want to take too much time, but I did want to give Dave's information as well as James's. I am going to post their information when we post the video as well, so that anyone that needs to reach out to them for any reasons, feel free to do so. They're great resources to have. Thank everyone for sharing your time and your expertise tonight. And does anyone have anything to add before we wrap this up?
No, thanks for having me.
Awesome. All right, thanks guys. Have a great night.
Thanks.